Hello everyone, welcome back to Lab4crypto. I know the market is a bit boring. We are moving sideways for the past couple of months, with the exception of the Japan stock market crash, which the market saw a bit volatility, which lasted only for a couple of days. But since then, we have the market divided in two camps, the one that believes that this was just the beginning and we have more downside, and on the other hand, we have the people that think that the worst are behind us. And now we are basically going to go up into the right from now on until 2025. Today, I'm going to explore with you if I believe that this calm that the market has is just the calm before the storm. And actually, I'm going to explain why I believe in the next couple of weeks we're going to have a huge move in Bitcoin, especially. But first, I'm going to explain you my thesis with some charts. And then together, I think we're going to end up with some conclusions depending on if you agree with me or not. If you like what you're going to see now, please give us a thumbs up and leave a comment. And let's dive into the graphs and see if that calm that Bitcoin has is just the calm before the storm. Let's start from the bearish scenario first. This scenario is seeing Bitcoin moving to valuations close to 54K. So now we are close to 59.4, and the market is expecting Bitcoin to move close to 54 and even close to 50K. Why they believe that, I will explain that in a bit. And I'm also going to explain why I believe for me this is the bullish scenario and it's going to give us more chance to accumulate Bitcoin at cheaper prices because I'm expecting 2025 to be a great year for Bitcoin. But let's focus on this scenario. The last time that we had rate cuts for Bitcoin was in 2019. When we had the rate cuts, Bitcoin, and during the rate cuts, Bitcoin price was going down. Actually, it dropped for about, let's say, 50%. I'm not counting the COVID crash because that was a black swan scenario. And then when we had the end of the rate cuts, Bitcoin had an explosive run of more than 10x actually from the lows. But let's focus on this area. Why this is happening is because Bitcoin is a risky asset, is in the category of risky assets. And until the market is sure that we have avoided a recession, capital is going to find its place in gold during this area. And then when they think that we have entered a growth in the economy, they're going to allocate their capital to more risky assets, which are stocks and crypto as well. If we go and have a look on gold, you will see that gold is uncorrelated from the rate cuts. You will see that in 2019, for example, gold was continuing to going up when we had the rate cuts. So you'll see a month before the rate cut was June 2019, and gold was continued to going up. Because if the market is not certain that the Fed have done a good job and managed to tame inflation, there is a chance that they can increase again the rates. There's nothing on stopping them to increase again if they feel that they have not tamed inflation. But during this uncertainty period, the place that most people want to put their money on is on gold. But there is an important correlation here that it's worth it to observe. This is the price of Bitcoin. You will see during rate cuts, Bitcoin price is going down. But when we have the start of the end of the end of the rate cuts and the start of the quantitative easing, you will see that there is a correlation between gold and Bitcoin, and that actually Bitcoin follows the trajectory that gold had with a lag of 6 months average, let's say. So gold reached its peak in August 2020, and Bitcoin, the first peak was in February 2021, and then was moving sideways for a couple of months before the summer low, and then again the second all-time high, which had in November 2021. But the point is, if you overlay the two graphs, you will see that there is a high correlation between the two graphs, and therefore you can expect, if we see gold continue to go up, Bitcoin do the same with some lag. So it's important for us to observe gold because we know that the markets are dynamic and nothing is guaranteed. But we need to see, in my opinion, if the health of the Bitcoin ecosystem is good. And if that is the case, I think it's going to be the place where people are going to move some capital when we have entered the quantitative easing era. Let's see some other charts that I have here. So this is the Bollinger Band. The Bollinger Band, sorry. The Bollinger Band basically is telling us that usually when Bitcoin has these periods which the jaws of the upper Bollinger Band and the lower one are really close, there is a sudden spike either to the upside or to the downside. And this chart is what I call the calm before the storm, because it's doing an amazing job also telling us that when we have these two jaws really close, we should expect a sudden move either to the downside, as you see here, or to the upside. So for us, it's good to see what is more likely when we have now these jaws coming closer and closer, because we had Bitcoin basically moving to the 58 to 60K region for the past couple of weeks. If we continue to see these jaws coming closer and closer, our job is to find out if it's more probable to move to the downside or to the upside. And I'm going to say that I believe there is a high chance that we can see Bitcoin move one more time to the downside before we have an explosive run to the upside. So I am between the two camps that I believe both can occur, but bulls are going to be the winners in the end. If we see Bitcoin monthly returns, you will see that September is not a really good month for Bitcoin. We only have 4 green months and the other ones are red. So statistically, we have higher chance to have a red month for Bitcoin in September. And because we are also going to have the rate cuts, as you will see, the market is expecting the first rate cut to occur in the 18th of September 2024 with 69.5% probability. Note that now we are at between 5.25 and 5.5. So for me, there is nothing wrong of seeing Bitcoin moving to lower values, even close to 50K. But the important note for me is that this can actually be a chance for people to get BTC at lower values before we see an explosive run for BTC in 2025. Because risky assets, in the end, you need to zoom out and think where people are going to put their money after they are going to remove it from the bank, let's say. Because when you have these high interest rates, you have high deposit rates as well. So from someone that has a large amount of money in the bank, let's say, is going to find places to put that money to, to put them at work when he can earn more than the, let's say, 1 or 2% that the bank is going to give him when we have the reduction of the rate cut. The rate cuts, basically, the reduction of rates. And also, because crypto is driven from retail investors, when we have the reduction of these interest rates, it's going to help everyday people to have more available cash in their bank, because also their mortgage are going to be reduced. So imagine that you are paying now $2,000. When we have the reduction of interest rates, your monthly mortgage payment is going to be 1,000. So when you have this excess amount of money, a lot of people are going to invest some of this money. I'm not going to spend it recklessly, hopefully. And a place which I think a lot of volume of that money is going to be end up is Bitcoin. And because Bitcoin is correlated with altcoins, you're going to see altcoins doing very well as well when the time comes though. So if we go and check the spot ETF, you will see that institutions and, let's say, not investors that used to be in the crypto market but are coming from traditional finance are continuing to accumulate Bitcoin. You will see that we started only with a couple of BTC in January 1 on January 11th, and now BlackRock holds 350K Bitcoin on behalf of their clients. And the same thing is with Fidelity. They're doing the same thing. Now they are holding 178K. And if you check all the other ETF issuers that continue to accumulate BTC on behalf of their clients. And as more people are get educated around Bitcoin, I'm expecting this trend to continue to go up. So for people to take a position before we have this full steam bull run, when they will have the quantitative easing, the rate cuts are at really low levels, and we're starting to see this growth in the economy, it's good to position yourself wisely before all that happens. And that is why I think that each opportunity from here on the downside for BTC seems to be a really a good idea to accumulate based on your risk tolerance, of course, not financial advice. This is what I am doing. And when I see Bitcoin risk hovering between the 40 and 48K region, which is in the mid range, and I don't see something really excessive as we saw in March when Bitcoin risk was really high, when we reached the all-time high, was 82%. I'm happy to get BTC, of course, because I'm dynamically allocating as we move into lower risk regions. But even small amounts, as we are in these regions, I think is going to be really good entry zones when we see Bitcoin reaching higher values. Because my expectation is that Bitcoin in 2025, worst case scenario, let's say, is not going to move above its two standard deviations that we used to see in Bitcoin moving. We go from 2019, you will see the blue line, which is Bitcoin price moving well above the green line. But currently, it move a smaller, let's say, distance between the blue line between the green line is continue to come closer and closer. So even if we just assume that in this bull run, excuse me, in this bull cycle, is not going to go above the green line and only is going to touch it. And if we expect Bitcoin to reach its cycle top in August 2025, that means that the two standard deviation is at 189K price for Bitcoin. So you can play around with this graph actually, and if you expect that to be in the beginning of 2025, that means we can expect 160K. And if we expect Bitcoin to go in the end of 2025 and even in 2026, you will see that this value, because it's monotonically increasing, we can expect Bitcoin prices to even reach 200K if it's not going to have an explosive run in the beginning of the year. But it's good to monitor and see your projection and reevaluate based on your risk tolerance. But the key here, the key point here is to position yourself before the full steam bull run. Because when you start seeing everybody around you speaking about crypto and you have random people calling you about Bitcoin, that means that usually we're approaching the cycle top. And it's crucial to have tools to make these informed decisions. And that's why we have built also our platform so people can explore every day these charts. For example, a bullish sign for me as well is that if we check the supply of Bitcoin that has not moved for the past 6 months, you will see that it's more than 65%. So people are waiting for 2025 and the new bull cycle and the cycle top to start reducing their holdings. They are patiently accumulate BTC, hoping for the bull run of 2025. Of course, no one knows what's going to happen, but in the end, this is what risk adjustment is, right? Some people they want the confirmation to enter, some people they don't, and they actually don't spend the time to understand Bitcoin and other assets before they decide to allocate some of their capital. But in my opinion, Bitcoin is poised to have one of the best years in 2025. And with institutional adoption and more people understand Bitcoin and learn about Bitcoin. And if we check, there is a lot of statistics that we can observe, and I will try to make more videos in the future. But to close up, I think there is a chance that Bitcoin can move to 54K in the next couple of weeks. And that is going to be an opportunity, in my opinion. Again, not financial advice. Because if we check the FOMO level, which is acting as a resistance now, which its values at 61.5K, Bitcoin is below its FOMO level and also it's below its bull market support band. If we check the bull market support band today, it's at the lower bound is at 61.3K and Bitcoin price is at 59.1. Therefore, because we are below the bull market support band and also below the FOMO level, September, it's a month that is not very good for Bitcoin. And the market is anticipating the first rate cut. There is no issue in my mind that for Bitcoin moving to lower valuations and potentially have an accumulation point, because I still see the strength in Bitcoin. Institutional adoption is still growing. More and more people are accumulating even small amounts of BTC. You will see that they are keep accumulating, and this number is still increasing. Therefore, to have quantitative easing in the 2025, the reduction of rate cuts, I think it's a very important point, which it will help risky assets grow even more in 2025. And the only gray point is going to be the US elections. Of course, if we have a pro-crypto candidate in the US elected, that means the probability of the crypto market doing well is going to be higher because we are going to have clarity in the laws around crypto in the US, which now we have the SEC fighting crypto. And all these delays, when you move to the court and try to resolve things, are reducing the innovation in the US, which it's the major economy, and we'll see that is affecting the crypto market a lot. That's why you see a lot of people speaking about the US market and are not talking about the EU or other markets. So I hope you liked the video. I close up my thoughts. If you like the content, please give us a thumbs up. And before I close, I want to let you know that in our blog, you will be able to put your email on the bottom. And each time that I'm writing an article about my thoughts around the market, you will be able to receive an immediate email with the article. And do not forget to join also our app and have access to more than 1,000 charts that they will help you navigate the market and position yourself correctly before the upcoming bull run. Until next time, bye-bye.